I'm here with Shane Clark, President of Euro-American Financial Advisors, the specialist financial planning and investment advisory provider for Americans moving to or living in Europe. In this video, we're going to discuss financial planning considerations for Americans moving to Europe. What's the most common financial mistakes Americans make when moving to Europe?
It's a good question. And I think it all begins with the visa. So how you arrive from the US into the EU. And it's different in each country. So some countries you have a choice of a digital nomad visa. Maybe you're moving to join your spouse. So as a family member, you can go in on an EEA family member visa. But getting on the right visa then impacts which tax regime you can get on. And nobody wants to pay more in taxes than they have to. So this is really important. As the first step, you want to work with a qualified immigration attorney who specializes in moving to that specific country. And then the next big issue is what to do with your house. So if you're living in the US, you probably own a house. Now, you don't want to pay more in taxes on the capital gains from the sale of that house. So what's important is to look at your timeline, have a plan, what point in the year you're going to move. If you move after the 4th of July, you're not going to be a tax resident in the new country that year. You wouldn't be due capital gains taxes. And then the final issue, I think, is who you can work with. So for example, if in the US you worked with Morgan Stanley, Merrill Lynch, Wells Fargo, many of those brokers and custodians won't work with you as an expat. So you need to make sure that your accounts are set up prior to moving. And usually you can work with Charles Schwab or Interactive Brokers.
How should Americans approach budgeting when moving from a US to a European cost structure?
Yeah, this is a great question. And I think it always starts, like most things in life, doing research. So before you move, you want to get a good idea about which country you're moving to. Maybe you don't know which city yet, but it's important to start looking at cost of living, cost of rent, all those types of issues. Then you can get a good idea of a budget before you move. Something else you can do is work with us to help prepare a financial plan, which will incorporate those issues as well. The next big thing, taxes. So whenever you move from the US to a new country, there's a new tax structure. And this is important. Many people don't know about wealth tax, for example. There's lots of surprises. You don't want them to be bad surprises. So it's important to research the new tax structure in your new country. And then the last issue is cost of living. So if you're moving from San Francisco, for example, to remote Spain, the cost of living is going to be much lower. If you're moving from remote Texas to Paris, the cost of living is going to be much higher. So it's a good idea to have a good idea about what's going to happen to your cost of living once you move.
What are the key tax considerations to address when moving out of the US?
There's lots of different taxes in the new countries that you're going to be moving to. For example, if you're moving from the US to Spain, there's a wealth tax, and it is designed to be incorporated in each region within Spain. So in Barcelona, it's the highest. In Madrid, there's no wealth tax, but then there's a national wealth tax that takes its place. In France, for example, there's a wealth tax on real estate. So it's important to look at which country you're going to move to, speak with a local tax advisor, and get an idea on what's going to impact you. Another big issue is what products you can buy and what products you can't buy. So for example, if you move anywhere in the EU, you might have heard it's a good idea to invest locally. Well, in this case, it might not be, because if you buy local mutual funds or exchange traded funds, these are going to be what's called passive foreign investment corporations, PFICs. And they're going to impact your US taxes quite negatively. So you want to avoid those at all costs. And then the last point is not being able to buy US ETFs. So that might seem a bit convoluted. Here's why. There's an EU legislation called PRIPS, Packaged Retail Insurance and Investment-Based Products. And what that piece of legislation does is it makes it impossible for you to buy US ETFs unless you're an institutional client. If you work with a firm like ours in the US, our sister firm, you can buy US ETFs.
So, how does residency status affect overall financial planning?
Depending on when you become a tax resident, radically impacts your situation. For example, if you're in the US we have what's called citizenship-based taxation, meaning you're always going to have to file or pay taxes in the US. Now, when you become a tax resident in a new country, there's generally two main ways that's determined. One is physical presence. So once you live in a new country for 183 days, typically you're going to be a tax resident in that country. So that means once you're a tax resident in the new country, you're going to have to be paying the majority of your taxes there and then filing an extension in the US. And the other big issue there is you're not going to be able to buy mutual funds or exchange traded funds from the US because you're no longer going to be a US resident.
What should Americans know about currency risk and managing USD versus euro exposure?
That's a great question. And I think it all begins with diversification. So if you've lived in the US your whole life, all of your expenses, all of your income has been in one currency, the US dollar. Now, if you're moving to Europe, there's multiple currencies, but many countries are on the euro. So one part of that is just diversifying risk away from the dollar. So what does that mean? It means in practice owning multiple currencies or owning US exchange traded funds that hold European securities. And what that does is by holding part of your money in the euro, that protects your purchasing power. So what that means, for example, last year, the euro appreciated relative to the dollar 12%. 12% is a big number. So that means you lost 12% of your purchasing power in Europe if all your money was in US dollars. So what we want to do is mitigate that risk. And that's one way to do it is by holding euros. Another question is how do you move money? How do you do it efficiently? Well, there's a couple ways to do it. The worst way is using a bank. If you go to your bank and say, I want to transfer $1 million into my bank in Europe, they're going to charge around 3%. Another option is using a currency broker. And a currency broker like Money Corp, Wise, Revolut, Spartan FX, they might charge between a quarter of 1% and half of 1%, which is already significantly better. And then the third option is our US sister firm can do it for you using an institutional rate.
How should individuals restructure their finances prior to moving?
This is a great question. And I think you have a lot to keep in mind before you move. So you've got relocation, selling a house, finding a new house, your visa, maybe you've got kids in school. That's a lot to keep track of. What you don't want to have happen is not have access to your money. So what we always recommend is around 6 months before you move, open expat-friendly accounts. If you do that with Charles Schwab or Interactive Brokers, then there's going to be no pause in service with your investment accounts. So we recommend opening those accounts, getting your assets transferred, telling them you're moving, and then there's no issues for you.
What are the biggest differences in financial systems between the US and Europe?
I think one of the biggest differences is just around the philosophy of it. So oftentimes in the US, we're very market focused. So publicly traded individual stocks, companies, shares, individual bonds, and there's a sense of you need to save for yourself. So a lot of people at a young age start investing in the market, setting aside some money for retirement. Whereas in Europe, it's much more common to invest in real estate. People might have inherited a house they'd maintained, a family estate, or they might use their excess money to purchase a rental property. That's probably one of the biggest philosophical differences. And then another important note is how pension systems work. In the US, we have an individual retirement system where you have a 401k, an IRA. Maybe your company sets aside some money for you, but then you have to save for your own retirement. And then we have that three-pillar system. Whereas in Europe, you often have a pension, and then when you retire, you received a fixed salary for the rest of your life.
How can Americans maintain financial ties to the US after moving abroad?
Yeah, this is important and it can be difficult. So one of the most important things, if you think about working in the US, maybe you're retiring, you have a credit score. So maintaining your credit score in the US is pretty important. What if you move back? What if you need to purchase a house at some point and you want to use debt to do it? One way to do that is using a US credit card. And that can be tricky. Sometimes the bank you were working with before might want to close your accounts. So what we always recommend is calling your bank, calling your credit card, anyone you work with, telling them where you're planning to move and just walking them through that scenario, seeing what they tell you. Another important issue is banking. And banks are on a different legislation than US brokers. So banks are governed or licensed by the Patriot Act. And the Patriot Act states you need to be living in the US with a US address to maintain your accounts. So it's important, again, to run this by your bank. There's also theory and practice. So in practice, maybe the bank doesn't care, but it's important to tell them ahead of time, you're planning on moving abroad on this date, and see what they say. There's also another option. There's two, actually. One is the State Department Federal Credit Union. It used to be for ambassadors. Now it's open to everybody. So you can open an account with the State Department Federal Credit Union if you join an expat group like RO or like the ACA. Then they can maintain your US banking relationship that way.
What financial documents and accounts should be reviewed before relocating?
This one's a little bit outside our purview. We're not lawyers, we're not accountants, but I think it's important to keep in mind that if you have a will, for example, in the US, that's probably not going to be recognized abroad. So one step we always recommend is speaking to your immigration attorney, who can probably help you with this. But what typically needs to be done, you need to take that US will, take it to a notary or a notaire in your new country, have it stamped. And then you can choose to recognize local law or US law upon when you are deceased. Another important question is life insurance. So you might have had a life insurance policy in the US for years. Is it going to pay out in Europe? That's an important question to call your life insurance provider and walk them through that scenario ahead of time. And then another one is banking. So your banking documents, you want to make sure that you continue to get your statements and everything you might need, 1099s for the IRS, and paying your taxes.
How long before moving abroad should Americans start their financial planning relating to the move?
That's a good question, and I think it depends on the person. So, for example, last week I had a call with a prospect who they told me they were planning to move in 20 years. And for me, maybe that's too long, but it depends on your own comfort level. Typically we say 6 months to a year ahead of the move. And then you can move things like your financial accounts. You can make sure you get on the right visa. It just slows things down a little bit.